Hello, everyone. It's Steve with Aptera Owners Club. Aptera released another SEC filing a few days ago, so I thought we'd go over it. Not not too many changes, but there's one big change that I'm sure most of you guys have heard about, and we are going to get into that in another video. But let's kind of briefly go over the major changes in this offering. All right, so pretty boilerplate stuff here. And then this is what's different is there's a new share price of 14.80. I believe that this may have been in a previous offering, but it never got implemented. The previous price was $10.50. So, it used to be like 380, then it went up to 10 and 50, and now it's at 14.80. As you will see later on, this number is somewhat arbitrarily determined. Does not mean that your shares have gone up in price, although maybe theoretically it has. Any of us that own shares right now, there's no way to liquidate them. There's no way to sell them. There's no market for them at this time. So their price is kind of arbitrary. And just because this price went up to 14.80 doesn't mean that your shares have gone up to 14.80. Oh, and while we're at it, before I get started, remember, I am not an investment professional. This is not investment advice. This is purely just me discussing this thing as a layperson. So do not construe any of this video or anything on this channel as investment advice. Okay. So this is all the standard stuff they talk about. And then I wanted to go over these risks related to our business and industry. This goes on. So this is the bullet points, and they go into it in detail here. So let's go here. So we have a limited operating history on which you can evaluate our performance. We have not generated any profits. Accordingly, our process must be considered in light of the risks that any new company encounters. So these are all what have been in these SEC filings this whole time. But it's good to kind of reiterate them. And these kind of sound like downers. And it's not me trying to be a downer, but this is just reality, and this is what they're saying. And you just have to understand that if you are one of these people that are interested in investing, super high risk, very, very high risk. And that's what they're saying here. They don't have much experience, and any new company is high risk. So understand that before you invest. Our auditors issued a going concern opinion. Going concern sounds bad, but that's actually good in accountant talk. Going concern means that they feel like you can continue to work as a business. You have enough capital. But it's saying that they lack significant working capital, and we will incur additional significant costs before revenue is achieved. These matters raise doubt about the company's ability to continue as a going concern. So currently they are a going concern. They do have enough capital to continue going, but unless they continue to raise funds, they will run out of money because they don't see any revenue coming down the pipeline anytime really soon. So they're going to have to raise funds to stay solvent, basically. A company plans to raise significantly more capital in future fundraising, offering equity at significant discount, including offering equity at a significant discount to the price offered in this offering. So that means they're saying, we don't have revenue, we're going to raise more money, you are going to get diluted, and the people that buy in the future, they might be getting their shares at a lower price than you paid for it. It might be lower than 14.80, might be lower than 10.50, might be lower than 3.80. They're saying that this is highly likely to happen. That they're 100% going to raise more capital. You are going to get diluted, but there's a possibility that the people in the future will pay less than you. All right. We anticipate that we will initially depend on revenue generated from a single model, and in the foreseeable future will be significantly dependent on a limited number of models. So that's nothing new. They're only making one model. I mean, they have to make this model successful and launch before they even think about, doing their four-wheel vehicle or their truck or their van or the other things they talked about. They have to make the current Aptera work. We are dependent on suppliers, the majority of which are single source suppliers, and inability of these suppliers to deliver necessary components according to our schedule and our prices and quality levels and volumes, or our inability to efficiently manage these components. So yeah, so they're just saying like it's a big logistical thing, and if they can't handle logistics or their suppliers drop out and they don't have enough contingency plans, it's going to be hard. So it's a very complex operation that they're running here. We have limited experience in high volume manufacture of our vehicles. Yeah, so they've never done this before. If our vehicle fails to perform as expected, our ability to develop, market, and sell or lease our products could be harmed. I mean, obviously, if this vehicle fails to perform as expected, they're not going to do well, and that's what they're saying. Company operates in a capital intensive environment. Yeah, so it's not like a software startup where all you need is like some programming people and some borrowed server time or things like that. They have to build. They have to have like space. They have to hire manufacturing workers. They need tooling. They need robots. They need all kinds of stuff. It takes a lot of money. Terms of any loans may not be favorable to the company. Yeah, so it's a startup high risk loan. The terms are not going to be good because no one's going to lend a startup money unless the terms are very favorable to the lender, which means it's unfavorable to the person getting the loan. Aptera operates in a highly competitive market. That's obvious. We face significant technological and legal barriers to entry. Okay. Our success depends on customers' willingness to adopt energy efficient solar powered vehicles, obviously. Developments and improvements in alternative technologies, such as full electric, hybrid, internal combustion, or continued low retail gasoline prices may materially and adversely affect the demand for our energy efficient solar powered vehicles. Yes. So, if someone happens to develop an internal combustion engine that gets 500 miles per gallon, probably the demand for this is going to go down. These are just kind of obvious things. We face several regulatory hurdles. Motor vehicles like those produced by the family are highly regulated, subject to regulatory changes. Yes. Demand in the vehicle industry is highly volatile, as we know, especially in the EV sector. You know that demand has fluctuated significantly in the past couple of years. We may be affected by uncertainty over government purchase incentives. As we know, currently Aptera does not qualify for any government incentive, at least at the federal level, and that might change. So if they get an incentive, that's going to help Aptera a lot. If they continue to not get the incentive, that's going to hurt them a little bit. There's product liability claims. That's true for any company. Limited intellectual property protection may cause us to lose our competitive advantage. So, and there is okay, so this is the one that everyone's gonna want to know about. We are subject to a patent infringement suit filed in July 2021. See the company's business, legal, and regulatory environment. So we're gonna see that later on in this report, and again, we're gonna cover this in a future video this week. Our failure to obtain or maintain the right to use intellectual property may negatively affect our business. And that's partially what this pending litigation is about, or could be about. Company's insurance may not be sufficient. Company anticipates it will be required to become a reporting company in the first half of 2025. This may indicate that they are planning to become a publicly traded company in the first half of 2025. I think they're hoping that they are going to be producing some vehicles at that time, and then they can go public, raise the additional capital they need to get into like larger mass scale production. And then they're saying our financial controls are set for a regulation A company where they have to do minimal reporting. Once they go public, they're going to be subject to a lot more regulatory and reporting demands, and they may not be set up for it. So they know about that. They're getting set up for it. Aptera depends on a small management team and may need to hire more people to be successful. That means it's going to cost more and have higher cash burn. Company relies on outside parties for manufacturing expertise. I mean, it's very true. They're very, very dependent on their suppliers. If CPC decides to quit on them, they're just basically done. Yeah, they're done. As a growing company, we have to develop reliable accounting resources. So that's very, and then global economic recession might hurt us. We will require additional capital to support business growth, and this capital might not be available on reasonable terms or at all. So that's what they're talking about here. Okay, so risks related to our securities briefly. The offering price has been arbitrarily determined. This is very important to know. They've arbitrarily determined this. There's no way to know what the stock is actually worth. They have some kind of formula that they're using internally. Probably some accountants have done some math, but it takes a lot of assumptions that may or may not be true to come to this stock valuation. We have broad discretion over the use of the proceeds. That means they can use your money however they wish. There's no minimum set amount. That means that if you're the only, even if you're the only person investing, they will take your money. It's not like there has to set a minimum threshold before they uh, they actually take your money. There is no current market for a security, so this is what we're talking about. You can't sell your stock. Those of us who own stock, we can't sell it to people. There's no market for us to trade our stock. It's not until it gets either bought out or they go public. Essentially, our stocks are worthless. Um, you will need to keep records for your investment for tax purposes. Our officers control the company. We have no independent directors. That means they don't have a board that oversees them. So our our um, our two executive officers and directors, so that's Steve Fambro, Chris Anthony, they control it. There is no oversight over them. We are totally trusting those two guys to use the money well. They may have potential conflicts of interest. We have broad discretion on how to use the proceeds. We do not intend to pay dividends. And the company has a series of preferred stock with rights that are superior. And so that means that if they do need to liquidate, you're not going to be very high in line to get any of the assets of Aptera. Those with preferred stock are going to have more rights to the assets. And I believe the people that are buying the current convertible notes, they will also have higher rights to any assets if they decide to liquidate. Okay, so the rest of this is pretty boilerplate. Then they talk about all this stuff, and then I want to move to this company's business. So this is where they talk about what they've accomplished and what's currently going on, and that's what we need to know. So they've substantially completed a production intent design. They've got so they we know that the PI design is basically done. Hopefully, I am gonna talk to Jason Hill at some point. We're gonna go over the PI design. He wants to wait until I think mid-September to do that. But we're gonna have that talk with Jason Hill. They've established suppliers. They've built 5 drivable prototypes. They've conducted validation durability testing on a lot of production parts. They've implemented an ERP and a manufacturing MEP and an ERP. They've created a robust intellectual property portfolio, so they have lots of patents pending. They've amassed over 48,000 vehicle reservations. And I will note that this has slowed down quite a bit, and I've mentioned that in the past, and the company says that it hasn't slowed down, but it's been pretty obvious. It's been stuck at like 40-ish thousand for the past like 2 years. So it hasn't, the first, like from 2020 to like early 2023, it ramped up pretty fast. And then the past 2 years, year and a half, it's kind of flattened off. They've raised over $135 million in crowdfunding. That is, obviously one of the most successful crowdfunding campaigns in history, especially for a actual physical product. Most of the other crowdfunding things are like that weird game, Star Citizen or something, and a lot of crypto things. All right. So this is their advantages. The fewer simple tooling, fewer robots, no welding. This is a lot to do with their design and the CPC body. And then this is their product. We're very familiar with this. Their market, they're talking about. But so then here we go. We talk about the suppliers. This is a little bit more information than we had in the past. Basically, Sherry is providing them the HVAC parts and some other things. They have collaborative aims to accelerate to lead up production. They're giving them access to their supply chain. And they've paid Sherry $1 million in cash and $5 million in stock. That was a while ago. So we knew about that probably 2-3 years ago. Additionally, we have technical services agreement with Sherry to assist with feasibility studies and technical services related to certain vehicle components. So a lot of these, like, I think bread and butter vehicle components, is going to be validated by Sherry and also provided by Sherry. Then the other people that we have supply relationships with, Yazaki, Yazaki is still on board. CPC, and CTNS. Alafe has fallen off of this list for reasons that we are all aware of now. And then here you go. This is the biggest thing from this SEC filing, and I'm sure you guys have all heard about this. So it says on July 19th, Zaptera USA Incorporated filed a complaint against Aptera Motors Corporation. The complaint alleges, among other things, patent infringement, theft of trade secrets, and tortious interference. The complaint seeks damages, including compensatory damages, enhanced damages, disgorgement of profits, exemplary damages, as well as injunctive relief and a declaratory judgment that Zaptera is the rightful owner of the patents in question. The company believes that this complaint is without merit and intends to vigorously defend itself against these claims. We are not aware of any other pending or threatened legal action that we believe would have a material impact on our business. I found an actual intellectual property lawyer who has been gracious enough to talk to us and give us her kind of take on this, and that is coming in a video later on this week. But basically what happened is, remember, Aptera dissolved back in 2021, and they liquidated whatever assets were valuable, and some of the assets that were valuable were their intellectual property portfolio. There was a Chinese company called Aptera USA that supposedly bought these patents, and then we thought that Chris Anthony and Steve Fambro bought the patents back from them, but maybe that's not what happened. We don't know, because I've seen the complaint actually, and they claim that they own it, and then Aptera basically wrote them a letter back, from what I can tell, just blowing them off and saying, you guys don't own these patents. This people called Idealab, they own the patents. You don't own the patents. And plus, you're not even a real company that's even registered in California, so we don't even know who you are. So until you prove to us that you actually own these patents, and then we're not even going to talk to you, because we don't believe you even own the patents. That's kind of my take on it, and we'll figure out if that's correct when we talk to the intellectual property lawyer. But the complaint only gives Zaptera's side of the story, and so they can say whatever they want in that complaint, which may or may not be true. All right, so but we're gonna get into that. Trust me, I'm very interested in this just as much as you guys are. So we have 29 full-time employees. That's the same. Then their intellectual property. This is their portfolio. Here's the patents that they've gotten. Here's the patents that are pending. And then this is just normal stuff. Let me see. There was one more interesting part that I wanted to... Oh yeah, here we go. This is the other important thing. So last time we saw a report from the SEC, we got financials for up to December of 2023. In here, we're going to get information up to April of 2024. So it shows basically that in December, they had 37.6 million in total assets and 17 in cash and cash equivalents. As of April, they have a little bit less total assets, 35.6, and then $1 million less in cash and cash equivalents. That's overall a good thing, I think, because they are burning cash continuously, but they've been able to raise funds to keep up with their cash burn between December and April. So that's good. And then they said in in terms of the California Energy Commission, they've kept current to all milestones. So they are still able to get the funding from the CEC grant. They have not fallen off the wagon on that. Let's see. Okay, this is what they plan on doing, and what they've done. So Aptera received its first production body. We know that, and actually at this point we know that they've received their first 4 production bodies. They formed a strategic alliance with CTNS. They've completed its full set of tooling for the body parts, so we knew about that. Vehicle has been released for production intent builds for validation durability testing. So we know about that. That's what they're currently doing this month. And they've completed design and validation of BMS. So what they're doing is their 12-month plan. So assuming this is the big thing, assuming we have enough capital, our 12-month plan is to complete our design and validation for production. So I kind of got the feeling that they said they do have sufficient capital. So maybe this is them being a little cautious in this filing. I think they do have the capital to make the PI designs. They do not have the capital to produce. That's what this convertible note is for. So I think they do have enough capital for the PI for the validation design. So they're still planning on making 10 to 12 vehicles. I suspect that's going down a bit, but who knows? I think before they were saying like 16 PI builds, so it's down to 10 to 12. Refinement of drive chain, complete design and validation of all electrical systems, complete crash testing, so that's still in the works. Purchase and install equipment for low volume manufacturing. Okay, so that's the part that they don't have sufficient capital for, and the build out of the Carlsbad to produce a rate of 20,000 vehicles annually in 2026. So these last two things are the things that they don't have the funding for. The first two, I believe they do have the funding for. Okay, this is kind of the important part here. So our estimated first deliveries on these pre-orders is 2025. We anticipate producing at a rate of 20,000 cars per year by the end of 2026. So that's by the end of 2026. So now they're saying that they don't expect to get full volume production until the end of 2026. So I think maybe a few deliveries in 2025 and a ramp up throughout 2026. And then by the end of 2026, they're going to produce 20,000 cars per year. That's if things go as planned. And then, as we know, in real life, nothing ever goes as planned. We have experienced production delays in the past due to financial constraints. Specifically, we have not raised capital in large blocks of capital required to fully fund our tooling. So this is what I think maybe some people don't understand. So they have been, they've raised $135 million. That's a lot of money, but you have to raise it kind of all at once to buy the tooling and stuff. Because if you get 135 million over 4 years, most of that money is going to pay the salaries of the workers and pay the leasing on the building rents and the electricity. So they're just contributing to the cash burn of the company, but not in large enough blocks to actually have funding. So you have to get enough funding that you have plenty of money to pay your people and pay your expenses, and then you have money left over to buy capital and tooling. Okay, so validation program and manufacturing facility, supply chain issues and disruptions, particularly during the time of the pandemic, technological challenges, which in prototype testing have caused us to redesign or find alternate suppliers for certain components of our vehicle. I think that is talking about, one of the things is probably the Alafi hub motors, but maybe they're talking about some other things as well. Had certain regulatory requirements we must meet for our vehicle to obtain safety certifications. Our ability to enter production is conditioned on raising a significant amount of capital. So that is very important. Closing a significant number of our pre-orders, availability of materials and goods necessary to produce the vehicle, and then availability of facilities, uninterrupted supply chains, that and the other. Yeah. So that is what's going on. All right. So that's what we get out of this SEC filing. Most of the stuff in there is stuff we knew about because we've been following them, pretty much daily for a while. But the thing in here that was kind of we did not know about and kind of hit us out of the blue is that lawsuit from Aptera. And so as soon as I saw that, I basically was like, well, I could try to track down the complaint and we could do what we always do, which is where I speculate to the best of my ability and learn about intellectual property law. But I did send out an email to a couple people, and one of them actually responded to me, and I'm very grateful and shocked that they did. But hey, we have an actual expert who's going to talk to us and walk us through the complaint. And obviously, this is not going to be legal advice. It's just, but it's someone that actually knows stuff. They're an actual expert in the field, so that'll be good. And I think we can all learn stuff. So stay tuned for that. And thanks for watching. Have a great day, everyone.